Nothing is certain in this world other than death and taxes. You've heard that before. People say it all the time. And it's a very popular phrase because it's very true. And it's something that you should not ignore and not take lightly, especially if you're overseas working. When I was a child, my father would often, come to me. Like if I went like trick-or-treating or something, I came back with a bag full of candy. My father would come up and go through my candy, and he wasn't looking for razor blades or shit like that. He was looking for goodies that he can tax. And he would say, the tax man cometh. And he would take a Reese's Pieces or a little Snickers bar or something. And he did that all throughout my life. Every time I had a bag of, chips or beef jerky or something, he would look at me and say, Paul, tax. And he didn't do this to be mean, and I would have gladly shared it with him, but what he was doing was trying to teach me a lesson about taxes. So let's talk about taxes. Now, before we get into it, I have to tell you, I am not an expert in these matters. I'm not a lawyer. I'm not a tax professional. I don't make money giving information like this. This is purely for entertainment purposes only. It's a conversation with my friends here on YouTube. Also, I want to point out that I'm an American, and as an American, I'm subject to different tax laws than, say, if you were from England or Australia. So check your tax expert in your home country. There are a lot of things we need to take into consideration when it comes to taxes in China. Now, some people will say, I don't pay Chinese income tax, and that's not true. Everyone does, or you should be at least. And all you got to do is go down to the local tax bureau. The one here in Zhongshan is Zhongshan's not a big city, but there is a person down there who speaks very good English, and her job is to help foreigners with their tax issues. And they're very friendly and kind. If you smile at them, they smile right back at you, and they will help you. And just go down and check and make sure that your employer's paying the taxes on your salary. Because if they're deducting it, they better be paying it to the government, not keeping it. And that does happen, so you really have to check on it yourself. I also want to point out the differences between tax avoidance and tax evasion. Tax avoidance is a good thing. If you don't have to pay taxes to a government entity of any kind, because under the law you qualify for certain exemptions or you have a certain special status, good for you. You've done well. In fact, that's what the laws are there for. Tax evasion is where you know you should be paying taxes, but you elect not to. A lot of foreigners get in a lot of trouble and all over the world for tax evasion. Tax fraud is where you falsely claim your income. Say, I made this money, it was a gift, when it was really salary. So what is the reason for this? Why is the Chinese government completely overhauling their individual income tax system? Well, the old law was in place since the early 1980s. Back then, the majority of income was through salaries and wages. Of course, over time, this has changed as the middle class has grown and they've got multiple sources of income, and people have exploited loopholes in the system for many, many years. They needed to change it. It is becoming more current and more in line with global practices. These changes have been put in place really to help middle and lower income people to reduce their tax burden and to kind of stimulate the economy and stimulate spending within the local economy. Let's get into the nitty-gritty of it. Most of these changes came by on August 31st of last year. Seventh Amendment passed. The first thing that changed was the tax resident rule. It used to be a 1-year rule. Now it's a 183-day rule. So if you're in country for more than 183 days, you are now subject to an annual income tax filing. Again, if you work for someone, your employer should be doing all of this tax filing for you. One of the biggest changes is that if beforehand you would calculate taxes in China on your monthly salary. So if you made 10,000 RMB per month, then you pay the taxes based on that amount. Now it's based on an annual salary. So whatever your annual salary is, the progressive tax system from 3% to 45%. So where you fall in that based on your income, it's your annual income, and that's what your tax rate will be. And one of the biggest problems with this, and what people are still going to have to figure out is, salaries adjust over time. Say you get a raise or a salary reduction, or you change jobs in the middle of the tax year. How does that affect your taxes? Well, now, instead of doing just the monthly filing, your employer will do a monthly provisional filing and pay the taxes. At the end of the year, you will do an annual reconciliation filing. That is similar to what they do in the West. And this is your opportunity to recalculate all of the taxes that you owe on the year based on your income and apply for a tax refund or do an adjustment and pay taxes on any income that you hadn't reported yet. The deadline for that annual filing has been changed from March 31st of the following year to June 30th of the following year. So you have 6 months to file that reconciliation. If you are self-employed or you have income coming from other places, you still need to pay taxes on that. And what you're required to do is go down to your bank and file a tax resident declaration saying, I am a tax resident, this is where my income comes, and this is what tax bracket I believe I will fall into. And then at the end of the year, you will have to file your tax reconciliation. There's different types of income, of course. So in the old system, you would have salary income, and then you would have what they call independent service income, which is just income from other sources. And that used to be taxed at a different rate. And now all of your income, whether it be independent service income or salary income or author income, royalties, things like this, are all combined for tax calculation. Another rule that most foreigners aren't aware of is called the 5-year rule. If you are in China for more than 5 years, you are considered kind of a permanent resident of China. That means your worldwide income, no matter where it is now taxable income by the Chinese government, no matter where it's made or what currency it's made in. So that means if you have a business in another country or even a YouTube channel and you make money from it, that revenue is now taxable by the Chinese government. So you got to check with your home country and make sure that, because you might have double taxation on some of that income. So how do you get around this 5-year rule so you don't trigger it and all of a sudden your worldwide income is taxable? It's very simple. Sometime in that 5-year period, you have to leave the country for 30 consecutive days, and then you can come back. So that's how you would reset the 5-year rule. Just take a 30-day vacation. However, if you're an American, do not go back to America for those 30 days. If you are in America for 30 or more days in a tax year, then you are now subject to American taxes. You will not qualify for the foreign income exclusion. Plan a vacation, go to Thailand, go see Southeast Asia, go backpack through Europe for a month, and then come back. Plan it well in advance. I'm currently just started my 4th year, which means sometime in the next 2 years, I'm going to have to leave China for 30 consecutive days and go someplace. Well, that'll be easy for me because I work at a college, so I get a lot of time off and big summer holiday. But for those of you who have corporate jobs or work for a training center, you're going to have to plan that well in advance. Save up your vacation time or let your employer know I will be taking a 30-day sabbatical. One of the major changes is the individual tax deduction. Now, the monthly individual income tax deduction has been raised to 5,000 RMB per month. So again, if you make 5,000 RMB per month as a full-time employee, then that deduction wipes out your taxable income. In a sense, this just basically lowers your nominal tax rate. So this is a great thing. But in addition to the personal deduction you take on a monthly basis, they've introduced some itemized deductions that you can apply for. These are everything from having elderly people in your home that are dependent on you, to education for yourself, education for your children, and also for your rent. You get anywhere from an 800 to a 1,200 RMB additional itemized deduction on a monthly basis. So it is unclear, according to my research, if this is applicable to foreigners. From what I've read, it just says Chinese nationals. But check with your employer, check with the local tax department and find out if indeed, as a foreigner, you can take these itemized deductions. Keep in mind that the local tax authorities have been given more power. They have more teeth to enforce these laws. So it's going to be very hard to hide any kind of income. If your taxes are not being paid, you will not be allowed to renew your work permit. You will not be allowed to transfer your work permit. You can have serious fines and get in serious trouble if you're not paying income tax on the money you receive. It's going to make it easier for the Chinese government to find people who are trying to skirt the tax laws. There isn't somebody sitting behind a desk looking at an Excel spreadsheet trying to determine your tax rate. This is all done through computers, through AI and data mining. From when the bank reports your deposits and your balances on a monthly basis to the tax bureau, and the computer says, well, where's the tax for that income? They'll flag it and they will freeze your account while you're under investigation. If this information gets to the immigration officials and you try to leave China, you will be banned from leaving. They'll say, wait a minute, you have all this money in your account. Where is the proof that you've paid taxes on this money? You can't leave until you pay the taxes. They'll do that. You really need to just follow all the rules and follow all the laws. They will look into your accounts. They'll look into your WeChat accounts and your Alipay accounts. Most of the money here in China is electronic. You get direct deposits, then you transfer that into your WeChat or Alipay account. You shop online with that. You buy groceries, you buy street food with it. Everything is done through electronic payments now. I don't carry cash anymore. It's actually an inconvenience to carry cash. You're going to see a lot of the underground payments and things go to a cash system. I am a foreigner, but my wife is Chinese. Can I use her personal account to receive money? The answer is no. And this is something that many foreigners do, and you can't do it. You have to be very, very wary of this. I always hear things like, Paul, I hate paying taxes. I pay it so much in taxes, and we can disagree on how those revenues are spent by governments. That's not what this is about. I believe if you pay a lot of taxes, that means that you make a lot of money and you're doing well in life. You should be happy. Paying taxes is a good thing. But everything you see around here, the heavily subsidized transportation systems, the infrastructure, the roads, the high-speed rail, all of this is paid through taxes. And the Chinese government provides that to its citizens and visitors and foreign workers who are living here. So again, paying taxes is a good thing. It's your responsibility to know the laws and to follow the laws. Ignorance of the law is no excuse. So I tell everyone, when it comes to this, visa issues, whatever, that you become the expert and don't rely on people like me or people at your office to tell you what's right or wrong. Double check, because it is your responsibility.